There's an adage that expresses an important truth: if you were to gather the wealth of billionaires like Adani, Ambani, Bill Gates, and Warren Buffett, and distribute it equally among the entire global population, within a few years, that wealth would revert back to the original billionaires. Why does that happen? The answer lies in the concept of assets. Robert Kiyosaki famously stated that the ability to generate income through assets is key to achieving substantial wealth. Understanding and harnessing passive income streams is essential for financial growth. The more diverse the assets you possess that generate passive income, the richer you become. Here are 15 assets that can enhance your wealth and bring you closer to financial freedom. 1. Cash. The first asset on this list is cash. Having money in the bank is essential as it earns interest, albeit often not enough to beat inflation. Nevertheless, cash is still a priority for many investors and companies. For instance, recent news highlighted that Warren Buffett liquidated a part of his holdings, accumulating approximately $277 billion in cash reserves. The reasons for holding cash are twofold. A. Invest in opportunities. Wealthy individuals believe the world is filled with opportunities. When a potentially high-return investment appears, having cash on hand allows for swift action. B. Earn high interest. Maintaining cash reserves can yield interest over time, contributing to an additional income stream. This financial strategy enables investors to strike when the market is favorable. Being financially prepared with cash can be crucial at the right moment. 2. Real estate. Next up is real estate, often regarded as one of the most significant assets. The appeal of real estate stems from two major benefits. A. Rental income. Receiving fixed monthly payments is appealing to anyone, especially without the requirement of working long hours. Real estate can provide this income without extensive effort. With the shift in technology, properties are not only homes but can serve as educational centers, offices, and even small businesses. B. Property appreciation. As populations rise, so does the demand for housing. This increased demand can drive property prices higher. For instance, a report from the Economic Times revealed significant annual price increases across various cities in India. In Bangalore, prices increased by 10 to 15%, while Delhi saw an annual rise of about 12%. Investing in properties, whether residential, commercial buildings, or land, can lead to substantial financial gains over time. 3. Bonds. Moving on to the third asset, bonds. When governments or companies need cash investments, they issue bonds. Investors purchase these bonds, and in return, the issuing entities promise regular interest payments. Bonds are generally considered safe investments since they are backed by the government. Investors typically start with a minimum investment and can expect returns ranging from 6 to 12%, depending on whether they invest in government or corporate bonds. Additionally, several tax-saving bonds allow investors to earn both tax benefits and returns. 4. Stocks. Stocks rank as the fourth asset. With the growth of technology and development, the Indian stock market has achieved unprecedented heights. Investing in stocks allows you to own a portion of publicly traded companies. As these businesses thrive, so does the value of your investment. A. Dividends. Many companies distribute a portion of their profits to shareholders in the form of dividends, providing a steady income stream. B. Capital appreciation. Investing in growing companies can significantly increase the value of your initial investment, sometimes exponentially. Stocks represent a bold investment for those looking to build wealth. 5. Mutual funds and index funds. Following stocks, we have mutual funds and index funds. Index funds are designed to invest in the top 30 or 50 companies within a given market index, such as the Sensex or Nifty 50. Many individuals aspire to invest in robust companies, and index funds provide an excellent vehicle for doing this. Many wealthy individuals understand that leveraging others' time and efforts can multiply their wealth. By investing fixed amounts monthly through SIPs in index funds, it's possible to build a considerable corpus over time. For example, investing 6,000 rupees monthly with a 13% annual return could yield over 1.36 crore rupees in 25 years. 6. Equipment. Next comes equipment as an asset. If you own valuable equipment that can ease others' work, renting it out can create a steady passive income stream. This could include anything from DSLR cameras to musical instruments or even vehicles. By renting out unused assets, you can generate significant income without much effort. 7. Patents. Patents represent an underappreciated yet valuable asset. When someone creates an invention or a unique product, they can file for a patent, essentially a legal document recognizing them as the rightful inventor. When a business uses that patented technology, they are required to pay the inventor. For instance, if someone invents a successful antivirus software, they can earn royalties each time it is utilized. With the right patent, inventors can secure substantial ongoing revenue. 8. Trademarks. Similar to patents, trademarks protect words, symbols, or phrases associated with a brand. In today's competitive business landscape, protecting your brand identity is paramount. For instance, the catchy phrase "Taste of India" is trademarked by Amul, giving it a unique market advantage. No other company can utilize the same phrase without consequence, which has significant financial implications for Amul and creates barriers for competitors. 9. Brand and goodwill. Brand and goodwill, while distinct concepts, are crucial assets for any business. A strong brand name can influence customer perceptions and drive consumer loyalty. Goodwill reflects how much customers value a brand based on experiences and perceptions. Companies with strong brand identities and goodwill often outperform competitors in long-term profitability. For example, MRF Tires wasn't always a household name. However, effective brand building transformed its reputation and newfound value. 10. People. The next asset, often overlooked, is people. Businesses often neglect the value of their employees until they leave. It's essential to recognize that the success of a brand is attributed to the efforts and innovation of its employees. It's the right team that drives a company's success, and hiring talented individuals can significantly boost an organization's potential. 11. Raw materials and commodities. The 11th asset covers the importance of raw materials and commodities. In various life situations, tangible goods can hold more value than cash, as observed during the pandemic when essentials like sanitizers and masks were priced at a premium. Wealthy individuals understand the value of investing in commodities like gold, aluminum, steel, and oil, as these often outperform cash in times of need. 12. Books, songs, digital courses, information. 13. Royalties. Royalties represent ongoing payments made to creators every time their work, such as a book or song, generates revenue. This can be a lucrative stream of passive income. For example, book authors like J.K. Rowling and George R.R. Martin receive significant royalties from their published works, consistently generating revenue long after the initial sale. 14. Unique rights. Unique rights, particularly geographical indications, GI, can be powerful assets. These rights protect products that have a specific geographical link, ensuring authenticity and quality. For example, Darjeeling tea is recognized for its unique flavor and aroma, generating significant annual revenues due to its GI status. 15. First mover advantage. Lastly, the first mover advantage is a pivotal asset. This advantage arises when businesses innovate and establish themselves in a new market ahead of competitors. For instance, companies like Ola transformed the taxi industry by utilizing technology to meet consumer needs. Similarly, Zerodha introduced online share trading, forever changing Indian investment culture. These 15 assets form a comprehensive framework for building wealth. By strategically developing and managing these assets, You can create multiple streams of income and pave your path to financial freedom. Whether it's cash, real estate, stocks, or digital content, understanding and leveraging these assets can set you on a successful trajectory. If you found this information valuable, please share your thoughts and insights in the comments. Let's continue exploring these opportunities together.